Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good. Oh my gosh. Good morning. You know, look, I'm a little late. Okay. Hey, we have here in about a minute, 1 minute before we get a big slate of data: consumer spending, personal income, core PCE price index. Then at the top of the hour, we will have the Federal Reserve's Brainerd. We also get Chicago PMI today. So we got lots of stuff going. I am not too anxious here to try and trade this. So it's the market's still being a little wild. Okay, so they've pulled. It's not as dramatic of a pull as it was for some releases earlier in the week, but they might pull a little bit more here just before the news. So this is going to be a big data release we got going here. Radoslav, good morning. And the treasuries are getting quite an ugly downtrend here before everything comes, before all of the news comes. So that's interesting. Well, if the numbers are good, that would sure result in a really, okay, so now they've really pulled. Okay. I was going to say it could result in a really big up move, but they're kind of pushed both ways. Okay, so personal income spot 3 versus spot 3. Consumer spending spot 4 versus spot 2. That's not good. Core PCE price index spot 6 versus expected spot 5. So I would say overall those numbers are bad and hawkish. But the price action in the treasuries, or how it has moved since the release, is a little bit fuzzy. They had a little bit of an up move and then a little bit of a down move, and now they're recovering the down move already. Scott, good morning. Yeah, they're all kind of moving all over the place. It looks like the dollar wants to get stronger again, though. It looks like the dollar wants to get stronger. I guess Putin is speaking at the moment. So, you know, for PCE, a 0.1% higher than expected number is pretty in line with what we typically get. I even though the Federal Reserve is really likes PCE, that's like their favored measure of inflation or whatever. I typically don't see the PCE move the markets a ton. But here in this situation, you know, investors might be prone to be more think about it more. Let's see, now the price is moving to the upside. Well, this is a little weird because it's moving to the upside even though the volume was very much sell. So it looks to me like what Putin is doing is he's saying that those 4 regions of Ukraine are now part of Russia. So that might be like, yeah, freak show in Moscow. That could be creating some flight to safety behavior here. At the moment, though, so like I gotta say, man, There's a lot going on today, right? Because we're at the end of the month. I'm not 100% sure what the end of the month flows are going to be either. But the end of the month flows may end up being much more significant than whatever we're getting from the news. So it's kind of okay. Okay. So I thought there must be something else going on because why was the futures just tumbling ahead of the news? Zero Hedge says pound tumbles after trust signals no reversal in fiscal stimulus plans. After surging for 3 days in a row, at one point unwinding all of its losses since last Friday's shock mini budget announcement, on expectations that UK Prime Minister Liz Truss may reverse on her fiscal policies, and some speculating that Chancellor Kwarteng may exit the government, the pound resumed its plunge after 5 a.m. Eastern Time when it emerged that the UK Treasury hadn't asked its fiscal watchdog to accelerate its economic forecast, confirming that the government has no plans to backtrack on the economic strategy, roiling markets. As Bloomberg adds, there are also no plans to alter the timetable for Chancellor of the Excelsior. Oh, is that how that is spelt? Excelsior Kwasi Kwarteng to publish a full forecast from the Office for Budget Responsibility on November 23rd. Alongside his medium-term fiscal statement, the Treasury said Friday in a statement following a meeting between Truss, Kwarteng, and OBR Chairman Richard Hughes. The unusual meeting between Hughes and the government's two top figures comes after Truss's new administration came under heavy fire from economists and politicians for announcing last Friday the biggest set of unfunded tax cuts in half a century, while declining an offer from the OBR to provide an independent forecast. The fallout was dramatic, with the pound plunging to a record low against the dollar earlier this week, and the Bank of England forced to intervene to prevent a meltdown in the bond market. Yet, despite that, the outcome of Friday's meetings shows Kwarteng and Truss are sticking to their guns despite global from such places as the IMF and the White House. Earlier on Friday, Andrew Griffith, a junior Treasury minister, sought to justify the lack of a forecast last week by saying the government had more plans to announce that needed to be factored in. Following the news, the market was wrong in expecting a reversal. The pound fell against the dollar, having earlier risen on market expectations that the government might reassess its fiscal plans. It was 0.4% lower as of 12:30 p.m. London. Man, this is long. I bet we're going to read it, okay? Still, some stability may be on deck. As Bloomberg notes, Truss will be hoping that visibly engaging with the fiscal watchdog will help to calm market nerves. Yet much depends on what the OBR makes of her economic plans, especially given the tax cuts were announced before accompanying policies were finalized. The government is still drawing up its medium-term fiscal plan, which is key to restoring its battered credibility with markets. In Friday's meeting, Hughes is likely to have run Kwarteng and Truss through the early forecast and indicated what savings the chancellor will need to bring debt down as a share of GDP in the fifth year of the outlook. A person familiar with the process said, however, the person said the OBR's briefing is likely to have been uncomfortable for the government. In the 12 years since it was created, the watchdog has never increased its estimate of UK's long-term average growth rate, something Kwarteng is relying on to help close the budget deficit and bring the national debt under control. It is likely he will need to find tens of billions of pounds of savings if he wants to stick with the announced $45 billion of tax cuts and restore his party's reputation for sound money. Well, 45 billion, that's a tiny number compared to $1 trillion that we were doing during COVID, right? The OBR said after Friday's meeting that it would deliver the first iteration of its forecast of Kwarteng on the 7th of October. The forecast, as always, will be based on our independent judgment about economic and fiscal prospects and the impact of the government's policies, it said in a statement. Meanwhile, amid the fallout from the market turmoil, the opposition Labour Party has soared to a record 33-point lead in YouGov polling. While the next generation election is not due for another 2 years, the atmosphere is febrile heading into the Tory party's annual conference, which starts Sunday in Birmingham. In a private WhatsApp message to Tory MPs, Kwarteng on Thursday pleaded with colleagues to back the government's plans and not to air their criticism in public. That's always a bad sign. We need your support to do this, as only the people who win if we decide is the Labour Party, he said in the message seen by Bloomberg. That is, listen, your concern should be whether or not your economic plan is sound, not whether or not people, you know, uh, the public perception of it, man, we need to do is that we win as if we divide the Labor Party. I don't, yeah, okay, whatever. Speaking on BBC Radio for Friday, I mean, obviously you want to have solidarity and everything, but the problem here is your fiscal plan, right? We got to give her a little bit of time, said Clifton Brown, who was an executive of the 1922 Committee of Rank and File Tories that decides party rules, and time especially to try and reassure the markets that they know exactly what they want to do for the economy. As Bloomberg concludes, those kinds of remarks so soon into an administration will ring alarm bells for Truss, who has made the most turbulent debut of any British prime minister in peacetime. Okay. So overall, that is something that could be oh, okay. So yeah, that could be something that is puts sell pressure on the treasuries as markets continue to see problems with the UK budget. Another thing I want to point out is that the kind of like the line where the Bank of Japan first started to intervene got touched during that piece of news. They touched it and brought it right back up to where it is now. So I think that we may be getting that makes the whole setup all the more interesting to me, that the Bank of Japan is out there. Now, the liquidity that I see in the market is like a big nope from me. So, like, to the title, is it over yet? Apparently not. Apparently not. Let's put some music on here. Actually, you know what? Let's do chill step. Let's do chill step. A little bit more energy. Now let me come down into Twitter next. What are we doing over here? We got everything set up on the stream right and everything. Yeah, looks like we're good. My son. That's a new name, I believe. Welcome. Indeed, how's it going? All right, so was there anything on Twitter we missed? Well, somebody is trying to scam from Fed Guy 12. Oh, you know what we need to do is we need to look at our the whole issue with the Jigsaw coupon, huh? Open it up in a new browser. Yes, so if you're for the people with the coupons, I changed the so they told me that they're only doing the $30 coupon now. So if you use the Speculator Sept coupon, it'll give you $30 off. I shifted the other one over, the $100 coupon, to Speculator Sept 100. that one still doesn't work. So, well, that was a pretty aggressive little bounce up out of that range when it broke. But you know what? I'm not sure I believe them. I'm not sure I believe them. Lena Umbrella says time to short. Well, okay, so here's the thing. Why is it doing this? I believe that the reason we are moving up is because the Bank of Japan is involved right now. That's what appears to be going on. If that's what's going on, I don't think that we want to try and short the treasuries. Yeah. The question is, do I want to be involved at all? Well, the liquidity is improving. The liquidity is improving. Okay, now we got Barkin speaking. That was not on my calendar. What's with that? I have Brainerd at the top of the hour, but I didn't know Barkin. So I was like arming my account and thinking about trading it, and then I heard Barkin and I was like, maybe not. So keep in mind, this is like hyper speculative, okay? Like hyper speculative, but I think that we have good reason to believe from the order flow and some of the prices that they moved off of and everything that there is a bid in the treasury market because of the Bank of Japan intervening in their currency. Now, we should keep in mind that last time that this happened, yeah, the treasuries did move up with the Japanese yen, but then afterwards, the next day, they sold the treasuries super hard. And there was some speculation that that was the Bank of Japan unloading their treasuries. In retrospect, I don't think that that's likely what was going on. In fact, I kind of wonder if it was people in the UK dumping their assets. Unfortunately, I don't really get the European data, so it's hard to say. With Fed's Barkin speaking, I don't think that necessarily makes for a good location to speculate. Although I do kind of suspect that I should be able to, go long here, the treasuries, go short yield, and maybe get a little extension of this move that we are seeing in the Japanese yen. But again, that's all based on a very speculative possible predictor of order flow. Another thing is that if we do want to take something here, like, it's pulling back a little bit, and then maybe they go for another break for another highs, we might get a little bit better, yeah. So I could see them coming all the way back to the scene of the crime at 21.5, for instance. Let's say 22.5. There's a little bit more liquidity at 22. Yesterday, you talked about selling the convolution model to people. How would you do that? Well, so I think that what I would do is I would build the model, and then I could either build in the convolution matrix into the, like, hard code the convolution matrix, or provide it as a file, or I could make it something that you query a web service to get. Right. And that would just be so that you can you know, so that you can perform the calculation for your instrument. I don't know if that makes sense. It'd be kind of hard because you're going to have to, like, for it to really be a very good matrix, I think you have to have a lot of data. And I would have to go through and do it for like all of these different instruments. So I'm not even, I think I need to do a little bit of work first. Work that I don't think I'll be able to do this weekend, but you know what? I think that we'll be closer to being able to do those sorts of things soon. Because I want to get more into the machine learning stuff, but I got this book. I've been reading. One of the things I've been doing in the evening is reading this book. Like, I'm almost done. Then I think I'm gonna take work off today. We're gonna record a video. We're going to study for this series 65. And then if I get that far, I think I will write that PDF for you guys. Actually, we could maybe start writing that PDF this morning if you want. Well, there's 3.7. So 3.7 looks like pretty good. That was a misclick. I think it's okay, but that was a misclick. I meant to put a limit order at 3.695, but looks like I'm okay for now. So like I clicked that, it made it look like I was being, what do you say, impulsive, when really we're probably in this location, we probably have some time in it, and I might even have an opportunity at 3.7 again. Yep. Bitcoin getting hammered here this morning, by the way. That's a little interesting. Interesting. So there is a little bit of a pushing around here, but the ticks aren't staying. Your Bitcoin puts will be happy. Well, it's not too extreme yet, but they kind of look headed down to 1900 at least, so we'll see. We'll see. You see, every time it ticks up, it's kind of not holding. I haven't gotten a solid bid at 23 yet, and there's an iceberg at 23. It seems. And see, goes up bid a little weak. That's probably because the 5 year's not ticking up. Okay, so that's a little better. And then the 5-year ticks back down. It drags them with them. So interestingly enough, when I come over and I look at my chart, yeah. Jeez. When I look at my chart, it doesn't show me that the cumulative delta is going positive, even though it looked like they were buying through in that location. So I think that my read here on the flow may be off big time. Well, Ethereum had a better moonlight than stocks. This says MarketWatch. It's interesting. Sometimes Bitcoin moves up before the indices, but not sure for sure, not always. Well, what I see is that Bitcoin just doesn't. Man. Okay, so I'm a little upset about this. I think that I may just puke and stop. So it's not that I think that this trade is not going to work out. It's that I didn't intend to hit. I wanted to put a limit order out and see if they got me. And if they weren't, I was going to pull it back up here. And then I would probably still be looking for a spot to get in. So that's why I'm a little upset. I think that what goes on in Bitcoin is mostly speculation, right? I don't think that they really have anything that's really effective at predicting when volume is going to come into Bitcoin. It's just some big guys decided to make a move. And that's why it kind of does this random stuff, it seems, especially around news where, like, no matter how the economic news comes out, it tends to be good for Bitcoin is often what happens. Or if it is bad for Bitcoin, it's kind of like the badness is like kind of limited. You think if they break 1900, they'll go much lower? Oh, okay. For what it's worth, the core PCE inflation numbers to be released this morning are likely to show a sizable increase in August from July. This would have been known to the Fed at the last week's meeting based on the CPI and the PPI. Powell referred to the 12-month rate of change as 4.8% at the presser. So he's been saying that news is known to the Fed at least. Well, that was a big mistake. When I got into it, I probably should have just gotten out at -5. That kind of sucks. But I guess I don't need to be too upset about it. It's okay. It does kind of look like I got caught on a big sell there too. So I think that it's not just obviously I executed it badly, but the flow that I was looking for did not come through. I guess the reason I'm mad is because I think if I had executed that the way that I wanted, I would have seen that flow come in and then would have decided not to do anything. That said, we're kind of like at the bottom of a range here, so they might be able to flip back up here. Let's see. Okay, so Brainerd will be speaking at the top of the hour, and we're going to get text. Okay, so here's Barkin. Oh, well, it has nothing to do with markets. It's the fundamentals of data engineering from O'Reilly. I've learned a couple of things that will be useful to our machine learning stuff. Did you give the backstory of Vinny making a 1.5 hour video? Did he make something about me recently? Because he doesn't just make a 1.5 hour video about me. He has like a whole week's worth of streaming about it. Yeah. Well, I think that oh yeah, dude, it was like freaking ridiculous, right? So the only interaction that I ever had with this guy was he came into our Discord and he started acting like an idiot and I banned him. And the log of that interaction is on the futures.io thread about him, if you want to read the log. And that's basically the gist of it. Like ever since then, now he hasn't bothered me in a long time. So I'd rather just like, you know, hope that he forgets about me. I think, you know, so not speaking about him specifically now, but like some people in social media will really use drama to try and promote themselves. So for instance, there's this user on TikTok named Just Pearly Things. I think it's like Just Pearly Things 4, and she's this girl. And she was on a podcast and she said that nobody looks good at 400 pounds. And so it kind of turned into this Just Pearly Things is cyberbullying fat women. And she's just been playing into it and like responding to all of the criticism and stuff. And it brings her followers, right? So people tend to do this. And I think that was a big part of it. Like the thing is, if you go back and you watch those videos, they make it this whole thing like they accuse me of being a scammer, but they never make any specific accusations. It's like, oh, you get affiliate payouts for, you know, referring people to the software that you use yourself. What's wrong with that, right? What are you talking about? The new Orion? Oh, have you seen the NVIDIA Jetson series of mini computers? No, I've not seen that. So while I'm yapping here, it's kind of starting to give me the spot that I wanted. Which one? I just own independent. Sorry, David, looking into Jigsaw packages and wondering which one you own. I just got the independent package. To actually, when I bought Jigsaw, there was only one package. I mean, it's been that long. So just keep in mind that the difference between the different packages is the education that you get. So I would say get the, you know, if you're really concerned about the price, just get the independent package. And then if you've gone through all their education and you've gone through all of the content on my channel, you've been in the chat for a while and you're asking me questions, and after a few months you still feel like that there are things about order flow that you don't get, then maybe pay for, you know, the higher education, because you can go and buy the education separately, right? That's what I recommend. The vast, I would say that, like, because I can see when people use the link, because there is an affiliate payout, and I can see which one they bought, and I would say that 80% of people just buy the independent package. Do you know when to make a trade? Well, so timing, one of the things I would say on timing is that if there is a liquidity hole, it's best to wait for that liquidity hole to heal, which takes roughly about 45 minutes. Okay. But moreover, if I'm going to trade, I want to have a predictor of order flow, right? So the thing that I think might be predicting order flow here for us is that it does appear that the Bank of Japan may have come in and pushed the Japanese yen up here. So that's kind of what I'm looking at right now. Yes, is looking pretty ugly. Well, it's not dire yet or anything, but I do agree it's not the best looking movement there. A man without enemies isn't a man at all. Quote from, oh, I haven't heard that before. Yeah, you know, at first it was kind of like, oh, well, I'm big enough that people pay attention to. I mean, back then I was basically like the only person streaming. So best scammers I think that qualify as scammers is taking another scammer's methods and modifying it as their own and still becoming like hybrid scams on YouTube. What order? Oh, okay. So sorry. Let me come here and show you guys what we're talking about. Let me open Chrome back up. I'm sorry. It's a really big problem that I have is that I'm not very good at knowing what other people do and don't know, right? I'm maybe a little autistic in that respect. So sometimes I will say something and you guys might be like, what the hell is he talking about? Because in my mind, you just assume that you're in line with me. So he was asking Jigsaw, there is multiple packages. So if you look in the video description, I have a link for the independent package. So you get $30 off as the coupon right now. I guess the coupon can change. So here's the thing I'll tell you, because it used to be $100 coupon. Jigsaw will give each user $100 off at some point in their lifetime. So if you're not able to get the $100 off right now, you just wait till Christmas and you can get $100 off on like the live license or something like that. Okay. So I wouldn't stress that too much. But this is independent. So independent after the discount, it comes out to $549 right now. But if I just come back out here and you go into it yourself, you don't use, oh, sorry, jigsawtrading.com. If you just come out here and you want to buy it, okay, you're going to come, no, I don't want the cookies here and crumb. There's different packages. There's independent, professional, and institutional. And if you look down through here, right, there's a free basic training, right? Then if you buy the professional platform, there is the advanced order flow training pack. And then if you really want to go all out, there's the institutional, which will also give you these trading with price and order flow strategies, additional training, and 12 monthly group therapy sessions. Same. Yeah, so the trade-off to Jigsaw is the monthly payment also. Yeah, so really when you look at all of the different platforms in terms of price, they mostly come out to the same when you think feature-wise. So with a Jigsaw, like if you think about Jigsaw compared to trading technology, right? Jigsaw has an upfront cost plus $50 a month, whereas trading technology, it's more like $70 a month or something like that. So over the life of the product, you probably end up spending the same amount anyways, right? Now with Jigsaw, you don't have to use the live trading license. That's just so that you can place live orders on the DOM, right? If you just only want to do sim, then you can always do that. Or, you can just watch the order flow over here and you can use your other platform to put the orders in. So if you don't want to do the live trading license, you don't have to. Now the software license is lifetime, but the live trading license is you can buy a year at a time, you get a discount, but it's a monthly subscription. If you can't afford to trade Jigsaw with the 3K account to just pay monthly, you probably just better off with buying maybe Super Dom for Ninja, although I didn't test it yet, or modifying Sierra. Yeah, so if you are constrained financially, well, so first of all, if you're constrained financially, you should ask if futures trading is really for you. Okay, but it's good to be aware of the cost. Sierra Charts is cheaper. I think that there's some downsides to Sierra Charts. It is a little bit haphazard. The organization of it isn't very good. There's all these features, but you've got to kind of dig and know how to change the settings to get it to work the same as Jigsaw, for instance, right? Any comments on footprint charts? Yeah, sure. So actually I have a footprint chart over here. It's kind of been hiding in the back. So I have a footprint chart of the S&P 500 over here. I think that the way that I look at the footprint chart is it's just a higher level view of what you see on the DOM. So I can see some areas where a lot of volume was absorbed and so forth. So from that perspective, it's really useful. But I would caution against some of these technical setups that people create off of footprint charts. For instance, saying that this high up here, because it's 4 and 4, is an unfinished auction, and so price is likely to move back up to that. I've tested some of those, and they did not work very well. So I would always be careful about anything that people say that some particular setup predicts which way the price is going to go. And when I say setup, like using the past data to predict what the future direction is going to be. is very, very questionable. What we get from all of the research kind of suggests that when a signal like that occurs, that the market arbitrages out very, very quickly. So markets, so volatility is path dependent, which means that you can look at all of the past, movement to determine about 60% of what the volatility is going to be, but not direction, right? So that's where I'm kind of like, yeah, footprint charts are great, but the way that most people try and use footprint charts is a fallacy. Yeah. Where did you think? No, that's a speculation, Radoslav. So if I come back over here, here's what I'm saying. When the Bank of so you can't see it because it's so far back, but when the Bank of Japan intervened, it was basically they came in at like 143 on the JPY USD. Okay. Now the 6J is the opposite of that. So I just went in back when that happened. I went in and put a line where that that hard line that the Bank of Japan had put down was. And you can see that during the news, the Japanese yen plummeted all the way down to it. And then they pushed it back really, really hard. And then there was a little bit of a stop out to the side. So that kind of made me think that maybe either the Bank of Japan was stepping in there or the market, knowing that particular line, was stepping in for them. And that's why I thought, and I think there's still a chance, but I think that the chance is significantly less now that there could be some further upside in the treasuries. But when I look at what we're doing right now, it kind of looks to me like we've fallen into a little bit of a hole at 112.17. There doesn't look like a very good reason for me to be trying to take a trade at the moment. If you change the time frames, the unfinished auction isn't there. Well, that could be the case sometimes too, but to summarize what I was just saying there, okay? Past market generated data does not predict future market direction very well, okay? There's 16. Didn't I just reset it? I guess they fell a little bit lower. That Fed's Dally, the economy is not on the verge of a recession and it needs to slow down. Oh, okay. I forget. She's the San Francisco Fed president, right? Just volatility. Well, so that's where it gets kind of interesting. So yeah, path dependency, that is the direction and the order of the directions and all of that sort of thing. There's been a study that says that path dependency can account for 60% of volatility and is more accurate than other estimates of what volatility is going to be that we have, like Garch. Okay, so that's one thing. The other thing is that there are a number of stylized behaviors that order flow exhibits. Now, the unfortunate thing is that those stylized behaviors, again, don't give you direction. But they can, in some instances, give you that we're not going to have direction in a certain location. So that the trading that we were getting around 17 did kind of suggest to me that we were in a liquidity hole. We'll see if we get sucked back up into it. At the moment, it looks to me like the market is selling based maybe on what Fed's Dally is saying, although I haven't seen any of the headlines that come through here that seemed significant to me. The difference between playing the stock market and the horses is that one of the horses must win. Sierra's got discounts if you prepay. Yeah, Sierra Charts is ultimately cheaper as far as I understand, but there's other downsides. Like for instance, you have to go into their data platform, for instance. So you could buy and sell volatility, sure. So if you had a large enough amount of money and you were willing to do market making as an options person, there appears to still be plenty of room to work within the quantitative finance realm to get more accurate estimates of volatility and ergo, take advantage of the less accurate prices that are already out there. That makes sense. But you could also come in if you're just, so like I said, it takes about 45 minutes for a liquidity hole to heal. Well, we came back up to the other side of this. It's kind of making it look like they're just gonna like straight up break out now, but it's still moving across the range. The liquidity is pulling out of the way, so it's not taking very much volume to come through. That could continue through if, well, I'm seeing the Japanese yen taking a little dip there though, so that doesn't make much sense to me. Do you see the dollar is looks like it's on a rise here? Something's happening. It seems like something might be happening, but I'm not entirely sure. There is a possibility that they fall back into the hole. That would be around 18. Although this hole is probably not too strong. I mean, there wasn't that much volume traded at it. You like Sierra because it's the most, well, but that's Ninja Trader. The amount of stuff that's available for Ninja Trader is just insane compared to almost anything else. It's a lot harder to make stuff in Sierra Charts, unfortunately. Especially when it comes to order flow indicators. You can do it in Sierra Charts, but there's a couple of things that Ninja Trader does for you that you have to do yourself in Sierra Charts. That's kind of annoying. Sorry, I missed David's question earlier. What are your thoughts on volume-based indicators, e.g. MFI, accumulation distribution, shaken? Are they useful? So think of it this way. Let's say that there's a bunch of different ways, but you said accumulation, distribution. Let's just say that there's a hard line in the sand up here, that there's like tons of big orders up here. Every time it comes up here, they're like really aggressively trying to push it away from this line, etc., 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 right? And so I might have an indicator that says that this is a good place to take a trade and take it and go short. But here's the thing: if there's another trader out there that wants to trade 100, they want to buy 100,000 contracts, guess what? They're going to eat through that. They're going to eat through that, and price is going to continue up, right? So when you have a technical indicator like that, all it takes is one big trader to make that indicator fail, right? So the thing is that there might be some like patterns and things that some of these indicators might be able to show you that might on average mean that you're more likely to go down than up in a certain location. But like the amount of edge that's available in that is so teeny tiny that the market arbitrages it out really, really easy. And meanwhile, this big guy that needs to buy 100,000 contracts because it's the end of the month or whatever the deal is, right? He's going to dominate the market. And so any of these other little things that you see are just, don't matter, because what the big guy is going to do in the end matters more. So this is why I say if we're going to look at the 5 things that I think are really necessary for a complete strategy, the number one thing is predictors of order flow. You need to have something that gives you a really good chance at predicting what the future order flows are going to be. So the best indicator, the best predictor of order flow that you can possibly get is when a government is intervening, right? When a government is intervening in a market, you just know which way it's going to go. I kind of suspected that was what was happening, but now I'm kind of thinking no. Kind of thinking, I probably shouldn't do anything. Okay, but that's your best predictor of order flow, right? The next one, and this is my point number 2, is breaking news. Breaking news can predict order flow. Okay, breaking news, economic releases, etc., etc. So that's got to be a part of your setup. Okay. Now the next thing is the order flow. So if you're trying to predict order flow, you need to be able to read the order flow that does come in to be able to verify that the predictions that you are making are actually happening or not, right? If I think that the Bank of Japan is stepping in here, then I should probably see market orders slamming the offers and pushing through. At the moment, I'm not sure if that's what we're seeing. It's been a little choppy. It's been a little choppy, although the 10-year has been buying, but it's been a little choppy, right? So the orders are what moves markets. That's why it's essential to be able to watch the order flow to understand what's happening. It's not that stuff necessarily predicts where it's going to go next, okay? But it does help you see what's going on right now, and it can help you keep out of bad trades because you can kind of see where the liquidity is at. If you know that there's kind of like a big liquidity hole here, okay, and that hole is likely to be around for a while, there's not much of a point in getting into a position in there, because basically what you can say is, well, I'm probably going to be stuck in this range for 45 minutes. So why would I want to take a position? And I definitely wouldn't want to take a position if I'm going to buy. I don't think I would like to take the position at the high end of the range, because if I'm wrong, if my predictor of order flow ends up being wrong, then I'm going to take a bigger loss than I needed to. And I know that it's going to be in this area for a while, so why wouldn't I rather try and take like 112.20, right? So that's how the order flow helps you, okay? The next part is correlated assets. So for the treasuries, you're going to want to look at the other treasuries for sure. But then you're also going to want to look at the dollar, the Japanese yen, and sometimes when there's other big crazy things going on with other governments, like right now with the British pound, you want to look at those. You also want to look at the S&P 500. So the reason that you want to do that is that moves in correlated assets can affect the order flow in your asset. In particular, if the 6J moves, right, then the market makers in your asset will likely move their prices in correlation with it. Basically, they look at what the correlated asset is and they're trying to do some sort of an arbitrage, right? So if the Japanese yen moves up, then they're going to move their offers up. So correlated instruments can create sudden and unexpected changes in the resting liquidity in your instruments. So that's why you want to pay attention to correlations. Okay, so that's 4. And then the 5th one is risk management. So if I'm taking a trade, right, and I have a predictor of order flow and I'm timing it correctly, it should happen right then and there. So you don't, I could have hung on to this and be down like $40, $50 and maybe this still like turns out, right? But from a risk management perspective, that doesn't make sense, because with the framework that we have, we should be able to predict fairly accurate, like when it's going to go and stuff. So that's basically how we do it. Now, there are other things that you can do with risk. You can kind of like take on a lot of risk in certain locations. Just, you have to be careful with that, because such risk management strategies do increase the fat-tailedness of your strategy. Okay. Ricky question, what exactly is a liquidity hole? How do you spot that on the DOM? Okay, so a liquidity hole is an area of low latent liquidity. So resting liquidity is what we see here on the DOM. And the problem with resting liquidity is that most players do not want to show their cards, right? So you might not be able to tell that there are limit orders in a location until it gets to that location. But when you have an area of low latent liquidity, what you're going to tend to see is that nobody on either side wants to really put a big bid or offer up. So right now at 20, well, it's kind of shifting around a little bit. I don't think that they're actually in this situation yet, but you know, there's only 58 there bid at 26, right? And if we were to tick up and then there was hardly any bid, ticks back down, hardly any offer, tick back up, hardly any bid, right? And it does that over and over again. That's a really good sign of low latent liquidity, right? Is that, yeah, not just what's resting on there, but it's like, as it trades over and over again, the amount of volume that is willing to be placed at that price is very, very low, right? So what causes that sort of a thing? Well, for one thing, it can happen because all of the people, or basically what causes it in general, is that all of the people that were willing to put liquidity up in that location have already been filled. And so there's nobody else left that wants to trade in that spot, okay? And then if you get below that spot, there's going to be more bids, and you get above that spot, there's going to be more offers. So, or another way of thinking of it is that price tends to settle where supply and demand are at their minimum, okay? Another thing, so something that might predict that a liquidity hole is going to form is a really big amount of volume traded all in one spot, like a big iceberg that kind of comes out of seemingly nowhere, okay? Another thing that can cause a liquidity hole to form is just spending too long in a particular location. But another thing that can cause a liquidity hole to form is a really impulsive move through an area, like off of breaking news, for instance, right? When you get breaking news, it will take off. And then what? There's a liquidity hole because it takes time for those bids behind it to come back, right? So that makes price likely to come back on the move. So liquidity holes are why you kind of get these like impulse, off of news, impulsive move, and then there's a big pullback and stuff. That's what causes that's a liquidity hole. Well, that last little move up was maybe significant, but I'm not liking the spread here on this today. It is the last day of the contract. Darn it. It was a little slow there. Yes. So, David, if you want to get deeper into it, there's a study about Walrusian auctions and continuous auctions where they explain mathematically how it happens. Okay, well, the S&P 500 is live now. It's a little, some of the opens lately haven't been all that interesting. There's some volume going through, but it's not super crazy or anything. There's the treasury. The treasury does seem to be having some upside pressure, but it's being driven mostly by the 30-year, which is kind of interesting. So has been the what would we say, like a lot of the volume and everything, and the dominant action has been because of the UK, and it's been concentrated mostly on the long end of the curve. So I'm wondering if some of that craziness is coming off here, and that might be part of why we're seeing a little bit of a rise here. but the volume that I'm seeing in the 30-year is a little bit more like what I was hoping to see, and the 6J is turning up as well. So see, that's a little bit more like what I will want to see if I get into a position, right? Is that I'm immediately seeing order flow in the direction that I want to see it. They're buying it up, and now we're even starting to see a little bit of offers kind of getting out of the way to some extent. Now, this is interesting, though, because that last tick, the 5-year, all of a sudden it's switching. Like the 30-year has been leading here, but now it's starting to look like the 5-year is starting to maybe like, I don't know, like catch up. So I'm wondering if we might see some steepening come in here. That would be really interesting. When you add into it, remember that the end of month flows tend to be positive for the treasuries. I think there's been so much crazy stuff has happened this month that it's really, really hard for me to guesstimate what it will be. But I'm going to guesstimate that probably the end of month flow in the treasury is buying. That may be part of what's going on here. We do like what we're seeing in the Japanese yen. That's helping. Okay, so Scott asked, have you heard of the no nonsense Forex? I've never heard of it, and if it's Forex, it's probably not no nonsense. A lot of Forex is a lot of nonsense because you can't see the order flow. I can't understand what's going on, right? I mean, there might be some situations where you can't trade Forex, if, you know, like currency interventions and stuff. You got to be fast, I guess, but I generally don't recommend trying to day trade currencies, though. It's a very different game, at least, that's for sure. Have you tried to combine the order flow data between the treasuries? I mean, yeah, so I had some things where I was kind of doing like a net cumulative delta from the spreads and stuff like that. But I didn't really find it too useful, to be honest with you. Like the thing that I find with the spreads is that the spreads tend to be created by market makers getting out of the way more on one side of it than the other. So looking at the market orders, the difference in market orders between them doesn't really tell you anything that you wouldn't have seen just from tracking the overall spread, if that makes sense. I'm more interested in what is the spread, what is the current correlation, what might that tell me about the current macro environment, right? Where is the money coming from and going to? It recommends to backtest and find 5 technical indicators to trade on a daily time frame. Okay, so here's my problem with that. How big of a backtest did they say? Because I say that you need 5 years of data or 10,000 trades in order to really establish that a technical pattern is reliable and really provides an edge. So what I find with a lot of technical analysis is that they are just being fooled by randomness. They don't know what it really takes to get a statistically significant result when you're talking about a fat-tailed distribution. And they'll very often mess with the risk. So, you know, your average take profit is a lot smaller than your average stop, for instance. And so that kind of makes them more likely to be fooled. We're going to talk about this in the next video. I mean, I've talked about it in a lot of videos, but I think today I'm going to record a video about price action, and we'll kind of talk about how that happens, because price action is basically a strategy that is optimized to fool people. Takes you the longest to figure out that it doesn't work, but in the end, it doesn't work. And it has nothing to do with the results that you get. Don't really have a whole lot to do with the strategy that you're using. It mostly has to do with the way that they're managing risk. That makes sense? So if you can find 5 technical indicators that over 5 years or 10,000 trades shows a meaningful profit, I would love to see it. I would love to see it, man, because I've never found such a thing. I mean, first of all, if you're using 5 indicators together, the number of signals that you're going to get is, you're not going to get very many signals. So you're going to probably have to have a really, really huge data set to be able to get 10,000 trades out of it, right? You get where I'm going with that? I've spent so much time backtesting and things. I've found some strategies that were kind of interesting, but never anything that I felt like was worth trading over the framework that I'm using right now. Okay, how do you incorporate options expirations in your trading strategy? I saw your video on SpotGam and I've been combining through their content, but I'm still trying to understand how to execute on it. Okay, so options gamma is a potential predictor of order flow, right? In particular, if we are beyond a line at which we are short gamma, that could extend moves. Or sorry, if we're beyond a line at which we are long gamma, that could extend moves. And if we're beyond a line where we are short gamma, that could limit moves. Okay, so I kind of look for those prices and what the overall options positioning is to make a guesstimate. You know, I really only pay attention to it when they're like in extremes, but I'm trying to make an estimate about how much order flow I might see because of that. But I'm also going to be looking at other predictors of order flow that I might have, like the end of the month. Today, the end of the month is the big one. It's the last day of the month. And then we also have all of this action that we're getting. Okay, so, oh, by the way, we're going to get Chicago PMI here in like a few seconds, right? Because that one releases, what is it, 3 minutes early? So here we go. Maybe you don't want to be in a position here, so yeah. Well, YOLO. We'll YOLO it. You can see though the market makers pulling out. Okay, so that's kind of interesting. Oh, wow. Oh, wow. Okay. Okay. I take it that the Chicago PMI was not very good. Okay, so that Chicago PMI, I did not expect to get as big of a move off of the Chicago PMI. You've never heard of the US Chicago PMI? It's a price manager index, right? Here, let's see if I can get a little bit better of a description of it for you. The level of a diffusion index based on surveyed purchasing managers in the Chicago area. Whoa, wait, what? So I just heard something over the news squawk that something about a Goldman Sachs research, but I didn't quite hear it. So here, now we're going to get the PMI number. The expectation was, so some subscribers get it earlier. The prediction, or sorry, the consensus forecast is 51.8. Based on the way that the market reacted, it clearly must be less than 50, right? $45.7. Jeez, Louise, that is definitely why they moved. That is definitely why that moved. Well, that wasn't the flow that I was expecting to carry me through. I might have gotten lucky here, and I'm still a little bit nervous about this trade. So what I was hearing was, I think it was a prediction for the next rate increases. But I didn't hear what it was. So I guess I just kind of have to sit here. The weight of this news is medium and my app filtered it. Yeah. Dude, Chicago PMI is a sneaky one, right? Because it's the only one that I know of that it's released to subscribers 3 minutes early. So you'll get the subscribers, the professionals, all got that news, and that's why they all pulled their orders, and then we saw the big move. And all the retail traders are like, what's going on? Huh? Right? But I was caught a little off guard. So I just got lucky. I just got lucky there. What I just did was really risky, and I'm just lucky that it paid off, right? Bad news is good news. Yep. Bad news is good news. Do you think that we're going to see some buying in the S&P 500 because of this? Well, so far the S&P 500 hasn't reacted too strongly to it, but the treasuries definitely have, right? What's this from Nick Timmeros? Core inflation was 0.56 in August from July. July's reading of 0.08 was revised down to 0.04. Core inflation was 4.9% on a 12-month basis in August from 4.7 in July. Blah, 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 blah. Okay. That was just like summarizing the data that we'd gotten like over an hour ago, I guess. So they've come up to like the highs, but they haven't quite busted them yet, which is interesting. Oh no, wait, they did bust them. That was a new high. That was that 28. Yeah, that 28 was new highs. There's a lot of volume that hit into the new highs before they got sucked back into the hole too. So that's curious, but it looks like the 30-year didn't necessarily go or break, and that's why I'm still kind of in the same spot that I was. So just to put the Chicago PMI news in context, right? It's a purchasing manager's index. So 50 is like neutral. So to go from 51 to 45 is a pretty significant change, right? That is basically shows that at least the manufacturing side of the economy is getting hammered hard. Well, let's come over here to Zero Hedge and see what they say about it. The market for initial public offerings has frozen. IPOs vanished as the market mayhem saps deal appetite. Yeah, sure. Shocked Wall Street reacts after Nike plummets on unexpected inventory surge. That's not good. Well, they don't have anything about the PMI yet, though. It's kind of interesting because this PMI is ending up being more significant news than, like, you know, the all of the spending and other stuff that we got, you know, at the beginning of the day, which is higher tier news, but because those were pretty close to in line, and this one is like a big losses, this one's mattering more. Oh, do we get stuff at the top of the hour? Oh yeah, we get sentiment. Okay. I probably should have factored that into this, huh? So we did get some sentiment numbers earlier in the week, didn't we? Oh, consumer confidence, and it was higher than expected. I'm gonna bet. So their estimate is 59.5, where versus the previous 59.5. That's shoot. So what I think is happening here is this flow is profit taking before the next big slate of news. Well, a little bit of fight there in the 30-year. Still moving across this range pretty easily. I mean, the liquidity is just not very good today, is it? Wow. Okay. UK was announcing how much gilts they bought. It was like 1.1 billion. Jeez. So that was an interesting tick. It kind of came back, but the spread on the micros came in there. I am seeing the buying, the 30-year seeming to drive it a little bit more again. I could maybe try a limit order at 11 to try and get out of here, but it doesn't look like they're going to let me. I don't think that would get filled. Whoa. Okay. Not sure what to think of that one. This is a big old order that just got plopped there at 24, isn't it? Like somebody just dumped 1,000 contracts there. They went down to it, nothing happened, and now they're running away from it. Joel says started from PA, then PA, and now I'm here. Does that to mean you started from technical analysis and then price action, and now you're here? Well, that's what I'm going to talk about in the video that I want to make about price action, is that it's technical analysis. Like, okay, well, they traded the big order that was there at 24, so it was a real order. Not too helpful for me, though. So the big thing here is going to be the University of Massachusetts inflation expectations. Jeez, I think I screwed this up today, guys. Well, and the 30-year came back down there really easily. Don't like that. Yeah, consumer sentiment is coming up here. Consumer sentiment and inflation expectations, followed by FOMC member Bowman speaks at 9 o'clock Eastern time. Well, some buying volume just came through there in the 10-year. That's kind of ticking around a little weird, isn't it? What the heck? Okay, so another little rung of volume came in there and pushed the 10-year up. But when that happened, the market makers on the bid side in the micro treasuries disappeared. So that was a little weird. I guess they didn't like it starting to drift up again. looks like they're pretty content to be chilling at 3.7 before the news. S&P 500 is rising here. Favorite news? Oh, I don't know. I think the one that's always the most interesting to me is the CPI, right? Well, shit. I guess we're going to YOLO this again, huh? Okay, the sentiment was lower with expectations. Okay, so both of them were lower than expectations. Okay, so no huge moves, so I think we're okay. So the 5-year inflation final went down 2.7 versus 2.8, and the 1-year inflation final was up slightly 4.7 versus 4.6. I don't think that either of those numbers really are too significant. And the expectations or the sentiment 58.6 versus 59.9. So I mean, it was a little bit weaker sentiment than expected, but a teeny tiny bit. I don't think that it matters too much. I don't think that it matters as much to like what is the current state of the economy and what we know right now as the Chicago PMI was. But we'll see. Like, it's not like, look, it's not coming through the way that we want. Treasuries took a little dive there. Although the Japanese yen seems to be rising here and the dollar seems to be dropping. So I don't know what to make of that. Wonder if there's a difference between the inflation expectations and the break-evens. I don't know. To be honest with you, I'm not entirely sure how much. I've only can think of like 1 or 2 times where like the inflation expectations was like vastly different than the estimate, where I recall this number moving us. And of course, the sentiment number, the main sentiment number, I've certainly seen big moves off of. But what the market's doing right now is a little kind of weird. Like the treasuries are kind of rotating around here. They did kind of fall down to the side a little bit, but like we're not really seeing a whole lot of volume come into the market at all. And like I said, the Japanese yen has been rising. So see, are they going to do the same thing now but to the upside? Because what we're seeing right now may just be market makers fooling around. Hmm. Okay. ZA, good morning. How are you? Let's go read the Zero Hedge story on the PMI. The Chicago PMI survey plunged unexpectedly back into contraction in September. That's the lowest print for the survey since June of 2020. None of the underlying components rose relative to last month. Prices paid rose at a slower pace, signaling expansion. New orders fell at a faster pace, signaling contraction. Employment fell, and the direction reversed, signaling contraction. So that's good. Employment is one of the biggest things that the Fed is looking at right now, right? Inventories rose at a slower pace. Supplier deliveries rose at a slower pace, signaling expansion. Production fell at the direction reversed, signaling contraction, and order backlogs fell and the direction reversed. Just add it to the list of recession red flags. Yes. Oh boy. Hurricane Ian strengthens back to hurricane and takes aim at South Carolina after decimating Southwest Florida. Wow, this hurricane is a real pill, isn't it? I haven't heard anything from Uzi yet. Uzi, if you're out there, you got to tell us that you're okay. I bet you though, because they do house cleaning. They're going to have their workout cut out for them after this, aren't they? Okay. Well. So what I'm seeing at the moment is some really extreme steepening is coming through. See, the 30-year is quite a bit down, even though the 10 and the 5 are kind of starting to push up a little bit. I'm seeing the 6J moderating. Oh, Bitcoin recovered its fall. That's interesting. I'm seeing gold is on the up move this morning and still looks okay. Nobody wanted to trade 23, huh? Whoa, okay. Well, that's a little odd. Did you see that? The 5-year just jumped like 5 ticks out of nowhere. Well, okay. I'm just gonna be like, okay. Seth just lucky, I guess. Something that we might see here now, though, is now that all of the news is out, some of this end of month flow might be coming through. So that could be end of month flow. Although, man, if that is end of month flow with the way that the liquidity is, they're gonna push it far, far, far. At 30 years, 30-year needs to come up more though. Yeah, 30 years still kind of dragging its feet. And there's another hit into 287. Okay. Okay. Ooh, and then the 292 pulse. Well, I'm sitting here thinking like something is gonna come out over Twitter or something, and I'm not seeing anything. So this is just a market. Let me tell you what. At this point, we got all of the news behind us. We do have a Fed speaker, don't we? The Fed speaker in an hour. Actually, a Fed and an ECB speaker in an hour. Hey, Seth, you can live trade one day. What do you mean by that? I take live trades all the time. Sometimes I take sim trades and sometimes I take live trades based on how confident I feel about it and how confident I'm feeling about myself. And there's definitely been some amount of buying coming through here. Interestingly enough, it's not really showing up very much on the cumulative delta. So I think I would say that even though we got like a really good move there, I'm still not quite seeing the order flow that I would like to see on the long side. And the micro 10-year is still showing a crazy spread. What's with that? Okay, we'll come in a little bit there. Something that I don't like is when it ticks up. Like it ticks up, there's immediately 500. And then it ticks down and there's immediately 500. Did that a few times. Now it's kind of been a little more normal. Some of that volume is coming in a little impulsively, kind of suggesting, again, a correlation. You're getting a pretty decent looking uptrend in the Japanese yen still. It will be great to see the whole thought process and execution. That's what you've been watching all morning, Joel. Right? We're short rates because we think that end of month flows and the Japanese yen will buoy prices. We don't like the liquidity right now. We're kind of getting some action that is helpful, but overall, I'm a little frustrated by the action. And I'm thinking that because of the spread that I might want to just bail. Like that move right there was kind of like, they're coming out, didn't go through that. So now it really is just market making. I still wonder that when the 5-year shot up there, what was driving that? But look, they're coming all the way back to where they were. Shit. And some of the deltas are starting to roll over a little bit here too. So are they gonna fuck with me here? No. 19 would be interesting. Well, I do kind of have some signs that we've got like a key balance area here at 20. But the 5-year really fell through there. So whatever was the cause of the move that we had seen earlier, it's not following through at all. Although I would say that they still look a lot more active. They still look pretty active. Like they're not looking like it's a Friday, they've all gone home and everything has died down. Like it's still moving around, but maybe that's just because the liquidity is so bad. I don't know. Oh, because you've got a big negative gamma there. That's curious. Wouldn't expect there to be a big negative gamma at that particular spot. They're thinking about it. Seems to be something wrong with my chart over here. Okay, there we go. Oh my gosh, guys, I feel like shit now. It wouldn't be so bad if the spread wasn't shit. I'm pretty pissed. I'm a little upset. What the hell? What the hell is going on? I'm upset that the spread is like 10 ticks in the micro 10-year. So today is the last day of the contract in the micro 10-year. And basically what has happened is now that the consumer sentiment news is over, the liquidity providers don't want to be there in the micros anymore. So if I have to take a loss, it's almost like $10 more than it should be. Right. Like I had some good stuff in my favor and it just never kind of went to a spot where I could really take a profit, take advantage of it, right? So I'm kind of stuck on this roller coaster. And I'm not getting any clear signs of spots in the liquidity where things might, volatility might contract. it kind of looks like they're just like they're willing to skate across this range. It wouldn't surprise me to see us all the way back up at 25 real quick. It's time to reset. Okay, so now I'm looking in the 30-year. The 30-year may be on the to like pushing to a new cumulative delta high, even though they're still they've been hammered quite a bit since bouncing off that 128 earlier. I have to say, this volume is a little odd. Like, the price movement is kind of like the, this is the crappy Friday chop sort of thing. But the volume is not. The volume is like they've still got something to do. Well, there's actually some buying coming through there at 21.5 and then hitting into an iceberg. And they clear the iceberg. Clear the iceberg. Take back down. Not a strong offer. Not a strong bid. Not a strong offer. See, that's like sign of a liquidity hole from that, created by that. Are we getting flattening again? We are. Interesting. Ouch. You see that crap? Well, that's not so good. Does look like the 6J is starting to drive down. Maybe I'm reading this wrong. Maybe it's the 15 is the right price and this lower end of it is the ones that they're screwing over. Because it seems weird that we had a little bit of a drop there and we haven't really moved too much in the micros. I mean, it is middling. It does look like that there was a bit of a liquidity hole between 21 and 22 and that they are getting sucked back into it, right? I guess the spread has come in a little bit too. But it widens every time you get a big tick there like that. See, I'm trying to avoid hitting now with a market order. I've wanted out this whole time, but I just don't want to hit it. But at this point, I've been in here for almost an hour and I've gotten 22 ticks on both sides. So, like, what the hell? That first trade that I took, that was a disaster. Wow. Okay. $6J maybe stabilizing here. S&P 500 didn't continue back up. I really thought that PMI would maybe push them a little higher. Like at least to the overnight highs, you know what I mean? I thought I could work it. It's just not cooperating. Like this is really not cooperating with me. And the 10-year did have some sell volume come through there finally. Although that doesn't look to me like a meta order sell sort of a thing so much as it does somebody puking. This order flow is really weird. Does look like they're gonna try and buy it up here again. Actually, that buying is coming in really aggressively now. Look at that. Wow, what? Like what? Well, that might just be crossing the divide again. See, I think that's a part of my problem here is I see stuff like that and I'm like, well, that's got to be like something's going on, right? But it may just be that the liquidity really sucks. What's a liquidity hole? So like where you're in one, right? Yeah, maybe not. It's going to be a spot where price doesn't change very much and you don't see very much resting liquidity on either side in that area. Implied volatility in oil is up despite being a slow day. People protecting themselves from something in the weekend, maybe? You think so? So like when I look at the treasuries here, it still seems like something's going on. Like it's moving a lot. That's for sure. Bitcoin is really moving at the moment. Bitcoin is about to bust its overnight highs. Like there could be some stress out there. But that's kind of the thing that makes me really, really anxious is that if there is some stress, it's probably going to be interest rates higher, right? So Delta. Well, then the 10-year, there was definitely some selling came through there, right? The other two, not so much, but in the 10-year, definitely. Which is perhaps another sign that it's, you know, like UK stuff or something. Mm. I may just be seeing what I want to see because they're not really giving me a whole lot to go off of here at 18.5. It's just stuck. Liquidity hole here and it's just stuck. Then there are times when it ticks up and it ticks back down. This is just stupid, dude. Fine. I'm really disappointed, guys. I'm so mad about how that played out. I'm more mad at myself because I really just was not executing very well today. I think that I had some okay things going for me at some points, but like I made a couple of mistakes in some weird places. We could try turning around and trying to go, that this is going to continue, because there's definitely something going on here, especially in the 10-year, that could be, like we could just continue to put a bid out here and hope that we get hit or something. Oh my gosh, missed it. There was somebody right there that had an offer out that would have been good to pick off. See, it's like something is happening. I don't know if Gamma's going to be the most important float today, though, D. Well, no, like something is definitely happening. It's just very difficult for us to judge how significant of a thing it is because the liquidity is so low. Look at this bullshit. Like when the buying comes in, they really get out of the way and it gets really impulsive, and then it just like sputters out. Well, how big of a... Wait, what? Okay, I'm confused now. Now I need to go and look. There's way more in the account than I think that there should be. Oh, no. I did, but okay. But even then, that's still... after that... No, maybe we're in the right spot. Okay. I was kind of thinking like, oh, that one actually kind of like really hurts, but actually we're just okay. Well, shall we go and see if the more recent one is doing any better? Oops, we don't want that. 10-year V, right? No, it's not too good. Bitcoin busting out here, man. For no apparent reason. What's frustrating to me is that, like, okay, so I come in and took a trade. I thought I had a good predictor for the flow. Turns out that I didn't. That's okay. But I should have only have lost like $10, $20 off of it. In fact, there were some points at which I could have taken some profits on that last one, right? So it was like, because of the liquidity situation, and of course it is the last day of the contract. So you are going to kind of get that, but because of the liquidity situation, I took a much bigger loss than I thought. And I thought that I was going to be okay with it, but I guess the sell that we had here was a much deeper one than I really ever expected. So mistakes were made. I'm still like, I didn't give up all of my profits that I've made throughout all of this stuff and everything, but $50 loss on a day like today shouldn't have happened. Shouldn't have been $50. That's not as much as I wanted to spend today. So now I could try taking another one. Could try going for this thing to continue pushing down. But I'm not feeling too confident about it. There's certainly when they go, but you see all this nonsense up here is like, come on. Yep. No, I think you're right. Is Monday's probably a better day to pick it up. But I do think something is going on. Like these flows are a little peculiar for a Friday. So I'm just going to put a little limit order out there though to kind of help along in a spot where I don't think that they'll fill me. Because you can see the selling is still coming through. But it is kind of starting to look to me like there's some stress in the market. He is a nice story. It's not about the money, it's always about being right. Yeah, it really is, isn't it? Thing that bothers me is now, I mean, this trend down that we've been getting has kind of been like, you could have paid up for the spread and made money off of this. It is getting a little bit wild. This did come up. It has been, like, when this started, it was 3.7, right? So it is a good 4 basis points, right? No, yeah. I just, what makes me mad is taking a bigger, so it's not even about being right. So I accept that I'm not always going to get it right. And it has been that when I do get it right, like, you know, I really know that I'm right, and I'm right over and over and over again. But what's happening to me is I'm not pushing it hard enough when I'm right. I'm way too adverse about it, right? So I don't really push it. And then you get these sorts of things where it's like, you lose, and it should only be a small one, and it's way bigger than it should. So, like, I've got to fix that to really get to, like, right now I make money, but like what I make mostly pays for the data fees, right? If I really want to get into like really building this account up, I've got to fix that. So, and here today was kind of a test case of that, and I thought that I could deal with the liquidity, and I couldn't. But that's largely because my I was just dead wrong on the direction, right? Man, the 30-year really got really plunged in delta there. And look at the yield. Look at the yields. Yields are all of the sudden normal again. What the why there? That's a little bit suspicious, to be honest with you. Where did this 10 come from? Wait a second. Is that, oh, okay. So these ones below us were the ones from like shortly after the news. Wow. So now look, they're starting to take out bigger numbers down here. Like some bids are kind of starting to come in, and they're just washing through. Again, no, it just wants to wait for me to hit into that, and now they're going to flip around, huh? Why is Bitcoin jumping out here? That's the other thing that makes me suspicious, is that Bitcoin is like going wild. Really? He spoke with my broker. He was so angry at the current market volatility, he really seemed defeated. Said trading has become stupid. This guy's been around since my first ES account. Gilts yields are ripping through our trade. Yeah. Can you see the gilts on flows, Jacob? Because it seems like that maybe people in the UK are selling today. Like this is not normal flows. Like what I think has happened is that after the news, some liquidity providers did leave, but that there is still some, I don't know if it's end of month flows or if it's just general stress flows, but it looks like there are some people that still need to do some stuff in the treasuries here today. It's starting to look like it's that they need to sell 10 years, and it's not, there's no liquidity to execute against. So now the yields are just getting pummeled. Because like really, if you think about it, Oh, okay. It's just choppy Friday trade. The major traders have gone away, and yet we've moved 4 or 5 basis points higher. You get what I mean? So what's happening is the liquidity is so bad that it makes our order flow reading a little bit difficult, but there's definitely some selling coming through here. Right. Once we're able to come back, take a higher picture view, look at the deltas and gave it enough time to follow through and everything, you're seeing that there's been some really severe selling in the 10-year and the 30-year. Right? Because there's maybe even a little bit of fight here, but it just keeps going lower. And if they get to the lows of the day, well, not the lows of the day, but 09.5. If they push 09.5, then things could really get crazy. UK is looking like it's going to enter into a trade war with India. Wait, what? By the way, actually, I meant to ask, I was on Zero Hedge had a story about something going on with the SOFR futures. Is there something going on with the SOFR futures? Clarify the pizza price: 1 large pep, 1 2-liter Coke, and 1 tip. Well, so the thing is that I try and keep everything on the stream like self-isolated and everything. So, you know, there's some things that we wanted to do. And I was saving up for it, and then then the Bloomberg subscription got renewed by accident. So that's also one of the reasons why I'm frustrated. Because like for me, I can spend money on whatever I want if I really want to. I just don't like spending money, I guess. But for this stream, it's kind of like, but I want to, you know. I could always break my rules and just buy it myself, but what would be the fun in that? What would be the fun in that, right? But I'm also kind of putting myself on hard mode here, trying to build the account with the micros and still be paying for the data fees, right? Because I'm like plus 300 or something like that without the data fees, which is really good, right? Actually, when you consider that I've been doing all of this with 1 micro contract, I've actually been trading really, really good. Nothing is going on with SOFR futures besides that they are starting to overtake volume and open interest of the euro dollar. Makes sense given the mandatory conversion date is approaching. What was the headline that they had? Let me go back and I'll find it for you. Another market break says SOFR swap spreads rocked by biggest swings on record. Well, okay, so it's not the SOFR futures, it's swap spreads, huh? Putin declares 4 annexed regions ours forever, blames U.S. for Nord Stream attacks. It's obvious to everyone who did it, the Russian leader said. Okay, you say so. Ouch. There's another new low. Fed put getting closer, equity market says. Maybe. University of Michigan inflation expectations tumbled in September. No, they did not. They changed 0.1%. Good grief. See, like, there's stir swaps are a dead market. Even euro dollars in the heyday in 90 barely had any swap volume. Okay. So it's probably just Zero Hedge getting all apocalyptic and overly excited. Oh yeah, what does SOFR stand up for? I don't know. I don't recall. Secured overnight funding rate. Oh, okay. So if I come over, okay. Interesting. So as we've had this move down in 10 years, I'm seeing the British pound get stronger. I'm seeing the dollar get weaker. But I'm also seeing the Japanese yen get weaker. So it looks like maybe some money is coming out of the US and going over to Europe. That's what the flows seem to be suggesting. You're still getting some good selling into the 10-year, although it does look like there's a bit of a liquidity hole right here. Want to hear a story from your class? Yes, I do. I'm not. Oh well, I still have to go and get into my morning meeting. Tell me the story. I'm just gotta get everything set up over here on this side. Come on. You might get a little bit of chop here. Well, it didn't like that. So one of my freshmen got to know trade bonds. So he came to me with his trading. Okay. What's his trading idea? Showed me his model. His words, I am returning 36% annualized on the past 25. What the fuck? No way. Do you believe it? Or do you think that he was cheat? Do you think that he's making a big mistake? Then I asked him, what are your chances of blowing up in any given year? Oh boy. I think I might know where this is going. Hmm. 100% is the answer. That's the problem, sir. I need a very, very large account to tide over the drawdowns, but eventually it break even and turns profit over 6 to 7 months. Ouch. No. 36% profit for like what it sounds like over 50% drawdown is not a very good Sharpe ratio, my friend. No. You should have told him, oh, I think you need to go and watch Speculator Seth's YouTube channel a little bit. Go and watch his video series on creating automated strategies. His deepest drawdown was 49%, something. Well, it's not terrible. It's not the worst I've seen, at least, right? Well, that little, you know, attempt to try and take it as it went lower, I got right in the liquidity hole. It was a bad trade, and I'm getting into that, like, when you feel like that the market is always trading against you and you're losing both sides, you're just that off kilter with the market. Kind of sucks. Yeah, I'm a little frustrated by the market maker here, though, that like why they widened the spreads there through that whole time period. What the hell was with that? Maybe they did that. Maybe that was just like the Europe close, and now that we're like to the top of the hour, they don't want to. I don't know. Well, guys, either way, it's okay. We'll be fine, especially if we got these big moves happening all the time. But I do need to work on, you know, when I'm getting a winner, really getting a winner, you know? Like really getting a lot out of them, because there's been some winners that were like really good and I only made like 20 bucks on them. So, all right, I'll see you next week. In the meantime, stay excellent, team.